In this episode of Returns on Resilience, we're going behind closed doors with investors to hear exactly what they see, think, and feel when women pitch. Joining me today are investors Lisa Calhoun, Stephanie Diaz, and Charles Robinson. Thank you so much for being here today. I have to say, as I was saying to you when we were preparing for the show, out of all of the episodes, this one I have been the most excited for. So thank you again for being here. To start us off, why don't you tell us a little bit about who you are and what you do and kind of how you got into what you do, investing. Lisa?
Great to be here. This is such a good conversation. So I am the managing partner and the founder at Valor Ventures. Valor leads seed rounds. We're usually the first round lead investor in B2B AI and
Big
SaaS startups.
Big boss stuff. Yeah. That's awesome.
Stephanie Diaz. I'm Principal of Innovation and Venture Strategy at Catalyst by WellStar. And my journey spans pharma, healthcare, tech, and venture. I've also done a lot of work with female founders, at one point hosting my own event series dedicated to empowering women founders. And my journey to kind of get to the other side of the table as an investor, definitely brought me face to face with the obstacles that exist for women on the venture side, on the investor side, but also as a founder. So I'm really excited to dig into this conversation today. And thank you for having me.
Thank you. Thank you. Charles?
Awesome. Charles Robinson. I am the managing partner and founder of 1888 Ventures. We invest in early stage companies that has a tie to the Southeast. I'm also a former founder. I've done it from the very beginning stages all the way up to Series F with Teamworks and Forward Cities, building startup ecosystems throughout the country. So this is not only a important conversation, but I'm glad to be having this conversation with my peers.
Thank you. Thank you so much. So let's jump right in. I'm going to let Lisa kick us off here. When you hear the term or the phrase women founder, what comes to mind?
I wonder why the person needs to put woman in front of the word founder.
Is it necessary?
Of course not. I mean, gender's not correlated with returns, good ideas, outcomes, or coding or sales, or gender is irrelevant in the business context. Mm-hmm. It is irrelevant in the context of intelligence. And so I think that the word founder stands alone and is strong on its own. And so when someone says, I have a female founder for you, I'm like, and you're bringing me a female founder because... And I just wonder why, and often I'll ask.
Mm-hmm. So, Stephanie, are we checking boxes here, or why the designation?
Well, I agree and disagree. I think that I appreciate the distinction about in the business context, but I do think that there are spaces when it is important, like when you're trying to find community and when you are, trying to find your tribe that can support you through what can be a really grueling and overwhelming process, especially at an early stage, especially if you're a first-time founder and you have not a lot of people in your personal network that have been there. And so in terms of finding the right communities that would support you through that, I think the distinction of female founder expresses that we recognize the unique journey you are taking or about to take, and we intend to serve you in a special way. But I I hear what you're saying about the intro to a female founder. I get it as well. And I think the way that I look at it is I hope that there's a moment in time when we can do away with that. But I think that we're in the midst and the thick of trying to change that. And I know people bring female founders to me because they know that I will see them in ways that maybe other investors wouldn't. And I like that about, about that. And I like forming that relationship. And I like being someone that they can trust, or someone where they can just be themselves in a pitch for once, And so I think that we, in the midst of this turning point, we might be in the midst of like the old and the new. But yeah, hopefully one day there's, we can shed some of those labels.
I think you've put a really great point on how difficult it is to pitch as a female founder, because if your connection was for social community and support, that's an entirely different meeting with me than for investment.
Oh, yeah.
And so if a woman is introduced to me and doesn't know through which lens, that can be really hard to know how to show up.
And
for
the
guys,
lack of clarity
that's
is
not
there. Yeah.
confusing at all. Like for them, it's like, Valor writes checks. Okay,
Right.
let's talk about money.
They're pitching regardless.
Exactly.
Yeah.
And so I think that puts an additional burden on the female founder for real.
Yeah, that's a big point, because when we think about community and the role that community plays in supporting underrepresented founders in general, it's huge. But I often wonder how much that reliance on community skews how we approach accessing capital. So what do you have to say about this, Charles? Where do you stand? How do women founders stick out or stand out to you when you are making decisions about investing in both men and women?
And congratulations on being the token male in the room.
I don't know how dangerous that is, so I'm going to be very careful. And Lisa, help me if ever I jump off the ledge with something too much. Just cut me off. I would say, I am on the spectrum with Lisa as an investor, and I understand where Stephanie's coming from a community standpoint. There is a distinction that I want to, be clear about. One, community and capital move at two different speeds.
Yes.
Right? And, when it comes to the label of woman founder or black founder, I think at the end of the day, you have to figure out what is the value proposition of your business, because, for better or for worse, this is just a game. This capitalism game, the returns in which that, we choose to be gluttons for punishment as fund managers. At the end of the day, we are looking to put money into people that can give us outsized returns. And because of those rules of engagement, when a founder wants to approach us, they have to have that perspective in mind, that not only they have a group of folks who are looking to get returns on them if they have other investors, we too have investors that are looking to get returns from us. So it's one of those things where I get it. At the end of the day, there are, hurdles and barriers and all of that stuff. But the context in which it is brought up has to be made very clear, because if you're talking to a fund manager, the fund manager is going to look at, can this business give me outsized returns? And I would actually say that it does the founder a disservice coming in to say that. Now, again, I think because we've dealt with the balancing act of the lack of investment based off the percentages that we've all seen and heard and things like that, I would say that actually does not help the founder to say to an investor, hey, I want you to invest in me, and I'm going to have more troubles than everybody else that I'm competing against who don't have as many troubles. If anything, you want to show your value add beyond your limitations. And that's my position on it at the end of the day.
To just add on to that, I've been running this experiment for years now called Startup Runway. And when I launched Valor, I launched Startup Runway as well. We're going back to 2016. Startup Runway Foundation now, it's a nonprofit today supported by places like Cox Enterprises and Georgia Power. But it gives away grants to underrepresented founders, which certainly includes women in the context of investment. But one of the things that drove me to launch it in the way that I did is that I wanted no one person to have to stand out in their socially constructed underrepresentation, because that is forced on people as an identity. The you don't have enough, you aren't enough, society doesn't see you as enough. And so I thought if I could remove the bias in the room by having everyone from underrepresented backgrounds pitching competitively, that it perhaps would make a difference. And it is making a difference for the founders who come onto that stage. Very fortunate that with the support of those grant checks, those founders have gone on to raise a little less than $100 million so far. So I think that part of that structure and experiment is working. And if there's a part that is working, it's removing the socially constructed narrative that comes into the person's heart when they're approaching a pitch stage, and the whole dressing of the stage is, you poor thing, you know you only got 2%, 1%, 0.5%, you're not good enough. That's garbage, and I think we should stop putting people on stages where we tell them that they are automatically less valuable than another.
Yeah, so you're amazing, and I already knew that, but I just want to tell you that. And I think like a lot of what you're saying is what makes Atlanta so special, right? Because I think we are special in how we approach just these sensitive topics, right? Because on one hand, I'm hearing, okay, I'm a female founder. Don't worry about the bias, okay? There may or there may not be. Don't worry about the stats. You know, you got to go in there and show and prove. What's your business doing? What's the value proposition, right? And I hear Lisa, Stephanie, the three of you all have this perspective, but I think about systemically and what's really happening like on a larger scale. And then I'm wondering like, what do I really do when I have to show up? Like, how do I really put that to the side when I know you're only one, and you're only one, but the bigger picture out there, it's systemic. If it wasn't systemic, then we wouldn't have that less than 2% of female founders receive capital investment.
I totally agree. It's
and I was
completely
just going to say,
systemic.
I want to be clear. I'm not saying don't worry about the issues. I'm saying,
where do I place it when I'm going? What do I do with it? Where do I place it?
So that's a great question. It's not necessarily, I will frame it differently than say, where do you place it? I say, accept it for what it is and figure out how to solve it in spite of.
Okay.
You know, it's one of those things where, you know, if you play any sport, as a kid, you know, if you're in PE and, you know, there's 10 people and everybody picks 5 and you're the last person picked, you have 2 choices. You can be down and out because you're picked last, or you can figure out how you dominate and win in spite of that. And I am not removing any of the systemic issues. I'm not removing any of the barriers that entrepreneurs, women entrepreneurs specifically is what we're talking about, have to go through. And I'm not saying that they should just, turn a blind eye. I'm saying is, how do you win in spite of? And what can you do to find investors that fit your thesis as a company, your growth projections as a company, and how do you get more people to back you based off of those things, not turning a blind eye to what's there?
So let's talk about that.
Really?
Oh, go ahead.
Well, where you don't place it is as an expectation. And that's the big thing, you know, that both of these guests are saying is there is awareness, you know, we don't have to lie to ourselves about what is happening in the current day industry or what's come before us. But there are success stories. And I think if you believe that you are going to be the next, then you do have to believe that and set those expectations to the side, or expect that you'll be the outlier and that you will use that success to help others in the future.
It's definitely a question of focus. And I really tell all founders, choose your battles and choose your playing field. So speaking of sports, for a lot of women, sports are often poor metaphors because sports are very, very divided by gender. And so wasn't it just this last month we have the first female umpire for the Braves? Wonderful, but the NFL only allowed female umpires 10 years ago? I mean, like there's a lot of systemic bias in sport. My sport, dressage, the men compete against the women. So it's a lot of fun. I really enjoy it. But to get back to what the founder can do, they can choose to focus on their business. And you can't necessarily focus on systemic inequities and build a company.
That's so true. That's a word.
And so, for example, when I raised my first couple of funds, I was the only woman in Atlanta raising funds at the time. I was invited to speak a great deal about my experience raising funds as a woman. I've raised over $50 million as a woman. But you don't see me with that as my platform because it is not my battlefield. And it is not my genius. Fundraising is not my genius. I'm really good at helping founders with B2B grow and scale. So I focus on what I'm great at and generally don't other people may want to know my thoughts on that, and often I'm very open with them, but it's not my platform. And so I feel like founders who happen to be from a less represented background, they need to give themselves the complete freedom to let society go have their conversations over here and focus on what gives you joy, power, your own authority, what you love to do. And you may still fail. I often fail too, but that's still your journey and you get to choose your path.
Yeah.
And I would also say, I think there's the philosophy piece of systemic and then the tactical piece of the systemic pieces. And I would say sometimes you have to be able to tell yourself, all right, I'm going to do my business and have a job. And a lot of times it is not as glorified or as pretty as it may look, and you may feel like it's unfair, but how do you give yourself a strategic advantage? And there are a lot of friends that I've talked to who has businesses right now and successful businesses that people would not even imagine that is successful, who are working a full-time job as we speak right now. And they have, and I won't name any names, but at the end of the day, you have to figure out based off of what is in front of you, because it's only a one-of-one as a founder. It is you against you. And how do you, with all of the things that you know is in front of you, how do you still win? And the moment you look at your hurdles and start to pontificate and complain and this and that, your competition is already running full speed with less hurdles than you. So the question is, how do I still win even though it's unfair? And if you do that, you'll be the success stories like the Topes of the world and the Jay-Z's of the world and you name it, the Robert Smiths of the world. You can be able to say those things and be able to share that story with other founders on how you can still grow in spite of.
So this is great. So confidence, self-belief, focus. I'm pulling out a lot of nuggets here. Where do they, when you speak to women founders, where do they really go wrong? If you had to give them advice on, that thing that you really want them to see differently on a tactical level, you want to see them do differently on a tactical level, what would that be from each of you?
I would say stop looking at your world as a female founder and just look at it as a founder, and you define how it is for you. Because there are a lot of courses, some of them have been pointed at me as a founder as well, where it's like, oh, you're a woman, you need more confidence. This is how you build confidence. This is how you dress for confidence. That is just all such crap. It's unmitigated garbage. People who want to sell you something want to sell you something. So don't be sold to. If you are a founder and you have certain strengths, play to your strengths. And if you have weaknesses, fill those in appropriately, maybe with a co-founder, just like anybody else. I think a lot of times the world of the startup innovation ecosystem wants to put on special programs for women to feel good about themselves, putting on special programs for women. And that is often fed with information around things like confidence, when really that's a projection of the system. The system is not confident investing in women.
So do you want to add to that?
I do. I love that articulation. And I think if we could replace confidence with a word, it would be clarity. Strive for clarity. I think when you arrive to a meeting with an investor and you're clear on your business plan, you're clear on your strengths and weaknesses, you're clear on the direction. I think that you exude confidence as a byproduct of that, but it comes with clarity first. And I think that clarity also needs self-awareness to be able to look in the areas where you might need to brush up, or you might need some partnership or mentorship. That a willingness to take a look and not just project confidence for confidence sake, but to know what roots that and to either double down or fill in the gaps, that allows you to arrive to all conversations, with a level of, I don't know, just something special that people want more of.
Well, and to your point, community is so important with that, which is why I'm so glad that there is we and that the city of Atlanta invests in that community for women entrepreneurs. Because when you're developing that sense of your own reality, all entrepreneurs benefit from community. And so for Atlanta to be really leaning into female entrepreneurs, I love that.
Yeah, and I want to speak specifically to the founders that are listening to this, because I've been there and I've talked to so many founders, and I want to make it abundantly clear, but then also give the scenario on why it's hard to scale your business. So one of the things that we obviously know of, and you mentioned this as well, Dawn, is women founders don't get as much capital, right? We can agree on that. The piece when you're starting your business that you do not want to get caught up in, that so many founders, specifically in Atlanta and throughout the Southeast and other founders in early stages, is cash flow. And this is very important, and I really want the founders to pay attention to what I'm saying here. When you're running your business and you're trying to keep the lights on, you're not making the best business decision for your company. You're just trying to keep the lights on. So when you begin to make pivots and try to get to the short-term go-to-market, not only does the fund manager notices that, we don't have the time to break it down to walk you through it most of the time. Not even most of the time, like 99% of the time, we just don't have the time to do that. But what I want women founders and all founders in general to understand is what you need to be able to do is, one, sustain being able to pay the bills so you can focus on being able to make the best decision for your business, and then you approach being able to raise money. That's one. Two, not every business should be raising money. I repeat, not every business should be raising money. You can still have growth. You can still have a successful business. And I think a lot of founders need to understand the end game comes through an exit, either an IPO, acquisition, secondaries. The moment you accept money, we as fund managers want to see an outsized return via an exit. If you don't have a very clear path on that, don't raise money. If you don't have cash flow taken care of, where you're not making bad decisions based off of trying to pay your bills versus making your business successful, don't raise money. And a lot of times, and I love what WEI is doing, a lot of times when you receive the funds, either when you're pitching on Startup Runway or you're getting WEI, you use those funds, you make a deck, and you say what you're going to use those funds for, but those funds are usually used to pay your bills.
Yeah.
And let's be honest. Yeah. And then you become a professional competition founder versus a true enterprise going from entrepreneur to executive. Yeah. And that's the very clear distinction, if there's anything, because I don't want to get it convoluted with the systemic piece and all of that stuff, because the reality is those emotions and all of those things are real. But brass tacks, tactically speaking, you have to be, you're doing this because you want to have growth and mission and all that stuff. But if you can't pay your bills, none of that matters.
Facts.
So,
and I've heard this before.
Yes.
That's why I'm still working my job. So I have two. I know we're getting like close to time, but I got two more kind of topics I want to make sure I touch upon. What's one insider truth about the funding process that founders rarely hear, but you wish they absolutely understood? Anything about the funding process that you
Atlanta
feel like...
is one of the best cities in the country, if not the flat out best city in the country for a woman pitching venture capital, because we have a wonderful density of female founded, successful venture capital firms. I love Valor. I'm partial, but I've got to shout out to Collab Capital,
yes.
Steel Sky.
Yes.
Come on, y'all. What? There's more.
Yeah.
I mean, keep it going. So Atlanta is one of those cities where there's a lot of good investors, and you should pick the investor that can help you the most. But you also have a lot of choices with female-led and female-managed firms.
Is there anything that they should shy away from, or any red flags that they should look for when they're trying to find the best partner or to pitch to a particular funder? Anything that you've seen from your colleagues that funders do sometimes, or your counterparts that they do sometimes, is not the best thing for founders that we should be aware of or can look out for?
I wouldn't say that any of my colleagues per se are doing anything that would be a red flag. I think what I would say to founders, it's more of an understanding of our side of the table.
Yeah.
Right now, in the time that you and I have been sitting here in this studio, I probably have 150 requests to look at their deck and how they're the best business in the world and this, that, and the third. Then I have another 50 from friends who, want to receive some type of carry. And then there's the very small few that I want to be able to get access to that either closed or has, the sweet spot of what I want to get my return on. That inundates of a fund manager so much, they don't have the bandwidth to be able to give you what you're expecting out of a fund manager. It is very much a transactional game. It is not personal. I know we say business isn't personal, but I believe it is in relationship is definitely a personal component to it. But if you are a founder and I'm a fund manager and I don't give you the feedback that you need, or I ghost you, it is not intentional. There's a founder that I love to death, absolutely, and she's a female founder. I'll say it out loud, a passion. With the tariffs and all that stuff, because she's literally one of the most brilliant financial founders that I know. And she hit me up. I didn't respond back for a month. She hit me up again, didn't respond back for a week and a half. And then she hit me up again. I'm like, I am so sorry. Let's go through this right now. And it takes that type of follow up and follow through versus looking at it as like, oh, you don't care about us. Yeah. You don't care about what we're doing. So I just want to give context, especially for my colleagues that I talk to often, who have not only just a good heart, but I also know what they're going through because I'm going through it as well.
One of the differences between a follow-on investor like Charles and a lead investor like Valor is that for us, a deep relationship with our founders is one of the non-negotiables, because we're getting married, we're going on their board, and we're going to be there a very long time. And so what he's saying, though, about the inundation and the calendar chaos is so true. One thing I can offer to any of our listeners who are founders, though, is that if you send us your deck, like the 2,000 other founders that sent in their deck in the last 6 months, you will get a super detailed same-day readout.
That's awesome.
From Vic, our AI. If you send it to this URL, deckcheck.valor.vc, because that allows us to plug in our custom AI that has been trained on all of our general partners' feedback calls. And when I take a call with a founder, as many of you who might be listening know because you've been on a call with me, it's recorded, not because I'm a control freak, but because I'm not as fast at taking notes as I would like. But thank goodness Fireflies is. And so that goes back into our Salesforce and processes through. So that allows us to kind of use an AI intelligence layer. And as a founder, we do believe you deserve that depth feedback even in a first contact. And we do use AI to help us give that experience even on a first deck submission.
That's very helpful,
Incredible.
both of the perspective, because you do hear that sometimes, like, well, I reached out, I didn't hear back, or I didn't get feedback, or there's a lot of misinformation, around, what is the process? How do they decide? So this is very helpful. I want to round out with a kind of a final question. Our time went fast.
It
right?
really
Yeah,
did.
it went really, really fast. But this has been phenomenal. What are you looking for? What's the spark? Like, how do you know? What's the thing that you look for in a founder that lets you know that, this founder is highly likely to be successful? Like, what is the it factor that each of you look for uniquely in founders that lets you know that they're going to be successful? Or is there an it factor? Or is it all just numbers?
I look for an absolute obsession with a problem, an obsession. And they've created a solution for that, but they're not as attached to their solution as they are to solving the problem. And so they're going to get this problem solved. And then I get to diligence their success to date on solving the problem and talk to their customers and things like that. But to me, those founders that have the spark are often more than obsessed with solving something that they must solve. It's almost a calling. And today they've got AI, a SaaS, but it's an MVP, and they're destroying that right now because they're going to do it better this way. That kind of founder is straightforward to diligence and also is able to create a sense of confidence in us about, is there there for us together as a partnership on your obsession with solving this huge problem for this type of customer?
Is that what predicts the resilience, what she's talking about?
I think it definitely supports the resilience, because if you don't have a deep commitment to why you are there, when the road gets tough, and it will be a lot easier for you to back out and walk away. So along with that deep sense of purpose, resourcefulness and execution, the ability to figure it out, to know who are your people you can lean on. When founders come and you can tell, they just surprise you in their resourcefulness and ingenuity. That is exciting, because you think, what else could this person do, especially with the right resources and support? And then execution. Charles was talking about it as we were chatting before, but that sense of urgency, some people will turn it around in a day and some people will turn it around in a month. And those little things are a big signal in terms of like who you want to bet on.
Yeah. And my perspective, and I'm glad we have, all of the different perspectives as fund managers, since I follow on, the things that, we look at is talent, timing, and TAM, right? So, do you have the talent to execute on the vision that you're trying to accomplish? Because a lot of times, especially in the AI world, there's a lot of layers, but, they're not tech founders, right? Do you have a co-founder that is obsessed and knows the problem and knows how to execute on it? And then the timing, why now versus 5 years from now, or are you too late? And then the TAM, is the market big enough where we can get outsized returns based off of, our check? Because we're 9 times out of 10, we're very selective on the pro rata because of the fact that we were follow on. So, when we look at that, is the market big enough for us to get a piece of the pie? Whereas if you're a lead, obviously you're married to them, so you're going to make sure that they get through. So from my perspective, those are the 3 things. And the sense of urgency, man, and there are founders right now, and they know who they are. I would have a 30-minute conversation with them, and I will have time that day to give them some feedback. And I say, if you send this to me, I'll take a look at it, and then I'll tell you what you need to make some edits before you hit the campaign trail. I still haven't received it. And even if they hit me up a month from now, I am not going to read it, because it's because there's that sense of urgency of like, hey, I'm here giving you the inside scoop on exactly what you need to do. And even if you come back, whatever excuse is, because life happens, right? whatever that reason is, that time is gone by because I'm on the next train doing the next thing, trying to get accomplished as a fund manager myself. And that's the part I think we miss. And again, that can get interpreted as you don't want to support. But if you don't have that sense of urgency, that is a signal, and it could be a wrong signal because life happens, right? But again, I'm comparing to the competition versus the systemic pieces. And I'm not saying that it's not there, but it's one of those things like, how do you push through and get it done now, get it done now, get it done now? So
this is great. So I one last question. Are there returns on resilience? Yeah, you go first this time. Are there returns on resilience?
I don't confuse effort with results.
Okay.
I'm going to be honest.
Okay.
I mean, you can be resilient, bang your head against the wall and make poor decisions as a founder. I know a lot of people who are running on a treadmill, who are putting out marketing campaigns and talking SEO this and this, that, and the third, but it gets no money in the bank. And quite frankly, no money in the bank doesn't mean anything to me. And you could be the sweetest, most hardworking person in the room, but if you don't have a clear direction on where that energy is placed, you're confusing effort with results, and that does nothing for me.
Are there returns on resilience?
I might reframe resilience just a bit and thinking of some storylines that have played out here recently, and also just the funding climate that we're in, where it is, it's been an interesting time to try and raise, especially early stage capital. You're having to raise, bigger rounds to last longer. I have seen founders who are hesitant to make uncomfortable decisions, like letting a team member go, have to navigate some pretty rough waters down the line. And so I think along with resilience, the courage to make a difficult decision, but that is the right one. Yeah. And those things fuel resilience and build it. And so putting those two things together, I think absolutely, they definitely are a big part of finding your way to those returns.
Lisa, are there returns on resilience?
I think resilience is table stakes for all entrepreneurs, venture-backed or not. It is a very lonely, challenging thing to bring something out of nothing into this world, whether it's a coffee cart or the latest, greatest AI. It's really hard. And so resilience is part of the skill set that you need. And you need to be setting your frame on a big dream that'll fuel that for you, because it's not easy. None of it is easy.
By any means. You rocked it. You rocked it out. Thank you so much for being here. And I could not have asked for any better diversity and perspective. And just thank you so much for being here. So that's a wrap on episode 3 of Returns on Resilience. Make sure you like and follow us at weatlanta.com. Until next time. Thanks for joining us for Returns on Resilience. If this conversation sparked something in you or reminded you of someone who needs to hear it, share it, follow us wherever you listen to podcasts, and visit weatlanta.com for more stories, resources, and ways to connect.